Now is really the time for Africa to industrialize, and Korea is a great example for us. In Africa, we need inclusive growth. We need much more equality. We need resources. But the problem that we have right now is that our economies are not diversified. We export our raw materials, and by exporting our raw materials, as our president likes to say, we are exporting our wealth and our jobs. We are at the bottom of the value chain, and we need to move up that value chain. And the way to do that is through industrialization, among others.
Now, if Africa does not get a grip of its finances, industrialization will continue to be mere conversation. But here we are at Busan at the 53rd annual meetings of the AFDB talking accelerated industrialization. I'd like you, ma'am, to give us your thoughts on the financial situation of individual countries in Africa at this time. Does it come across to you from the data that you have access to that the countries within Africa are getting a grip of their finances?
Yeah, I think that a lot of progress has been made in Africa, but many African countries are not operating at their maximum potential. You've heard the presentation. We have more than 10 countries in Africa whose growth is above 6%, and 29 whose growth is above 3.67%. But it is not enough. It is way below their potential, and it is way below what is needed to meet the Sustainable Development Goals. Now, this being said, if you look at the resources gap on the continent, it's enormous. We're talking about $100 billion only for in terms of infrastructure, for example. Official development assistance is not increasing. Foreign direct investment is not sufficient. And I think that one of the ways out is domestic resource mobilization. That's what needs to be looked at, and we need to pay a very closer look to this.
I'd like you to, at this point, talk us through the role of the African Development Bank in financial crisis management across the continent.
Well, we've been there in times of crisis for our member countries, be it during the Arab Spring, during the food crisis, during the financial and economic crisis. The African Development Bank has been there, and we've responded to the call of our countries by providing much needed financing to our member countries.
During your presentation earlier, you made reference to some borrowing programs of the AFDB in the capital markets. I'd like you to shed more light on that.
We have an $8 billion borrowing program for 2018, and we are quite active in capital markets. We are an established benchmark issuers. We do dollar global transactions. We are active in the euro market. We are active in Australian dollar, in Vietnamese dong, in Swedish krona. So we've issued in more than 20 currencies. And the size of our funding program has been driven by the size of the volume of our lending. And our lending have been going up. And because we are a AAA rated institution, we are able to raise cost-effective funding from the market in order to on-lend at competitive pricing to our clients.
From where you stand, what's your view on the B ratings of most African economies?
Well, we've seen a lot of progress in Africa, and because many countries are facing challenges in terms of resource mobilization, in terms of the kind of financing that they receive, they've been some have been going into the capital markets, and quite successfully. But we need to be, it is important to get as much resources as possible in order to meet the development challenges. But it is important that the debt raised from the market is being invested in the productive economy. There are challenges in terms of, or there are risks in terms of debt sustainability that needs to be carefully looked at. And but I'm sure that our countries are managing that debt quite carefully.
And you did refer to that also during your presentation earlier, where you said that if used productively, debt can actually unlock opportunities for countries across Africa. I'd like you to talk us through some of the AFDB's balance sheet optimization strategies.
Yeah, we've been at the forefront of balance sheet optimization. If you look at the needs of the continent, it's a notion of need. And at the end, what we are providing, what other partners are providing, as I said, is insufficient. We need billions and billions of dollars to achieve achieve the SDGs. So we've been at the forefront of innovation through balance sheet optimization. We have done an exposure exchange with some multilateral development banks, which have added capacity of about $10 billion to the institution. We are using some mechanism in order to be much more present in the private sector of low-income countries. Balance sheet optimization is our new way of doing business because our resources are finite and we need to turn over our balance sheet. So after we finance a project, when the project is de-risked, doesn't need any additionality from the African Development Bank, we will lay it off to third-party investors. So this is our new way of doing business.
Now, in the drive of the AFDB to attract investors to Africa, what investment classes, particularly or sectors, will the AFDB be focusing on?
Well, the high-fis of the African Development Bank to light up and power Africa, energy, to feed Africa, integrate Africa, industrialize Africa, which is the theme of our annual meetings, but also improve the quality of life of the people of Africa. Are all the sectors that we will be looking at. They are interconnected, and it is what is needed for us to be able to meet the development challenges of the institution. So these are the priority areas for the bank.